And who would have thought that a government shutdown would have been one of the best things to happen to interest rates in 2025? What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you with the week ahead. I want to cover three things, one, two, three, that I believe are going to affect interest rates this week. So stick around. I think you'll learn a ton, and I'm going to give it to you in about 5 to 7 minutes. So the first thing I think we need to look at this week that I believe has the greatest potential to move rates is ISM data. And I say that because it's coming to us earlier in the week. And what ISM stands for, it's the Institute of Supply Management. It's a pulse on the streets of what is going on with the economy. So they're going to reach into businesses and ask them basically three things. Are you hiring or firing? Are your orders increasing or slowing down? And are you paying more for materials? And the number that traders are looking for is if you see a slowing number, that's going to be good for interest rates. We're not hiring, we're firing. Orders are slowing down, they're not increasing. We're not paying more for materials. That is stabilization. That would be good for inflation. On the flip side of that, if you get a hot reading, it's going to signal that the economy is a little bit more robust. So things like this are going to weigh heavily on traders this week. That's coming to us on Monday, and it's also coming to us on Wednesday, I believe, this week. The second thing that I think is going to move interest rates this week is going to be ADP. So ADP has not the best track record when it comes to reporting data. We've seen that in the past where they've been way high or way low on their reading, only to see the non-farm payroll number, which is the government number, totally go in the opposite direction. So in this environment, I think it's going to have a huge impact. Again, we have been flying blind. If you look at ADP last month, I think it came in right around 13,000, which is a bleak number. If you once again get that, I think the repetitive nature of that ADP number is going to signal to a lot of traders that, whoa, brakes on, this economy is struggling. We're not hiring, we are digressing. And I think the hope then is going to be that the Fed would change their position of being more, hey, we're going to stand off. We're not really sure about that December rate cut to we need to give that December rate cut so we don't fall into a recession. And I think that's going to be something that's going to be huge. And then the third thing I think that's going to be really big for traders this week is going to be several who are speaking. However, the most important one is Fed member Waller. He speaks on Wednesday. And the reason why it's significant with him is he's got a reputation of being a straight shooter. He's been ahead of the curve as far as what the Fed has been intending to do and what it does. So he's been very precise. And therefore, he has the reputation and respect of basically the right hand person that people go to besides Powell to get their information of what the Fed is going to do. And he's a voting member of the Fed. So he's got a vote with regards to that Fed funds rate. So I think those three things are going to be huge this week and have the potential to move those interest rates. ISM, ADP, and then obviously you have the Fed member speaking. Now, outside of that, who knows what's going to happen? You had a judge now say, hey, the SNAP, the government's got to pony up and pay the money so that people can get their food stamps. You got the administration saying there's not enough money in the fund to cover it. It's getting really interesting. It appears that it is at a huge stalemate. Neither side seems to be willing to give in. We're at day like 35 right now. The longer this lingers, the more detrimental it's going to be to the economy. And I know the Fed is very concerned about that. But I'm saying even once we come out of that, we're then going to learn about the ramifications of this shutdown. And the longer it goes on, the more favorable, I hate to say it, it is for interest rates. So have a great week. Ride out these peaks if you can. If you can't, make sure that you know the economic data that's coming out, know exactly the last day that you can pull the trigger to lock in that interest rate to close on time. And lastly, make sure you're working with a professional that's disclosing to you the yield spread that they're making because it directly affects your interest rate and it could be something that you use to pay your closing costs. because without question, you're going to have an opportunity to refinance in the future, and you do not want to keep paying all those costs. All right, y'all, have a great week. Make sure you hit that subscription button. You never want to miss a beat. I come to you every day with a daily dose, come to you Friday with a Friday update, and I got some educational stuff as well with my What's Brewing segment, as well as just the educational piece on the channel. Thanks for tuning in. I'll be coming to you next week with another week ahead. Cheers.